Hey everybody, good afternoon. It is Doc Severson and Dave Lukas here of 12 Minute Trading. Today is Monday, the 15th of April, tax day. So maybe there's still some tax loss selling that's going on. People raising funds so they can cut a check sometime later today. I don't know, but I think it's more to do with what's happening overseas. Dave,
Yeah.
what's going on out there, man?
Yeah, that's what we got, right? We've been talking about forever, right?
Yeah,
Talking about how all this market needs from these levels is a catalyst, right? It needs an excuse to sell off and correct. So, what better than war in the Middle East, right? And so we had Iran over the weekend. Israel has now stated and come out and said they are going to respond today into tomorrow. So, what's happening? Markets selling off, flight to safety. Now, we could reverse and go back the other way tomorrow, right? Who knows? But one thing that we have been watching, we've been talking about, is we've had these daily chart energies pretty charged up coming into the end of last week, this week. In fact, I think both you and I have said, hey, we're not making any trades right now. We want to see which way this thing goes. And we've seen that release really start between Friday and today. Both the SPX, the NDX, and everything are releasing that way. So it's it's been warranted. It's been needed for a while. I think you and I were talking that we're not that far away from 5,000 on the SPX. That's a good first target, but ultimately, if we wanted to go the full way down, get a good 10% correction, that's that 4,800 level that has some really good support at it, right? So that would be a natural place to go to. But 5,000 is a 5% correction. So, but I think there's a couple other things at play here. You and I were talking about this earlier. This is, I hate to say this because, it could be like a little bit conspiracy type stuff, but if you're the Fed and you've got a problem with bond rates going up, right? We saw the 10-year over 4.6 and that sort of thing. You've got this problem where, and the Treasury too, you're having to refinance all this debt, right? And all this debt is piling up and it's higher interest rates. And the only way to lower interest rates, especially the long end of the curve, the Fed can't do anything about that. They can control the short end of the curve, which is why they're talking about cutting rates. But the long end of the curve is the market. And what drives bond rates down is fear. And so if you crash the stock market, it can create a flight to safety, which would go into bonds, which would then take bond rates down. And now you're refinancing at lower rates, right? So not saying that's going to happen, but or that's what's happening. But I don't think the Fed would complain if you started seeing those bond rates come down because the market's really taking a hit and people are flying to safety. So,
right.
so yeah. So a lot going on out there. This is one of those weeks just to set back and let this move really confirm itself and tell you where it's going.
Yeah, there's some other things. I mean, we can look for typical landing spots here if we go to use the fib retracements here. If we go bottom to top all the way, and this is just approximate. I'm not going to dial it in perfectly, but you can see how the 5,000 level, and this is a massive weekly swing. I mean, this is one of the bigger swings that we've had, more linear swings. And so coming down to a 23.6 retracement we've already talked about the 5,000 level there being potential support. We are also looking at the 38.2, which would be somewhere around 4,800 as well too. And just below that, just below 4,800 is a full 10% correction.
Right.
And guys will look for that 10% level. I've seen them come down to that on the tick on futures markets and reverse there. Okay, 10% check. We're done. Let's go.
Exactly.
So we've seen this before. We have.
Yeah, and you look at the SPX, you look at that starting that release. Now look at the NDX with the same. The NDX is interesting because it's not only the daily chart releasing, but also the weekly chart starting to release a little. So, or at least it's pointing down. Let's put it that way. So, kind of an interesting that pair, going together right now.
Right. So the NDX is still holding pretty tough right now. And so here's our October move.
Mm-hmm.
And yeah, we're nowhere near 23.6 right now still
No.
on this.
No, and if this really gets going, I mean, the NDX certainly has the ability and the power, to get down, in a move like this, a good 1,500 points to the downside if it wants to go down there. I mean, and that wouldn't be, I mean, that would actually line up if you look at like the moving average you have there at 16.2 and those levels. That's a pretty normal type thing to see. And that would still be a higher or a higher low. Yeah, it would still be a higher low. So that would still show that this trend is intact. So again, it's actually healthy for the market to have a good 5 to 10% correction. And I think in every year there's a 10% correction, or at least historically there is. And so to see that happen again, not a big deal, right? Look at that thing. Look at that flag, like just that bull flag that's just setting up on the SPX.
Yeah, that's 3 weeks in a row. So it's so as you talked about your center moving average, which is a 20-week moving average in this case, is just below 5,000. So that's the type of level that we would expect to see. Now, if this is going to get longer and uglier, and this is something that Dave and I talked about, a lot of times what we'll see is we'll see these moves in 5% chunks. We'll drop 5 to 6% or rally like crazy, make everybody think that it's all over, and then we dump another 5 to 6%. We rally like crazy, dump. So even these three, these don't count as 15%. This was only a full aggregate 10% correction that we had last summer into last fall. So watch for this type of stuff to happen. We get up to 5,000, we print a lower high, and then eventually we move down to 4,800, something like that. So I guess what Dave and I are saying is we've got April, May, maybe even into June, we're going to be dealing with some form of corrective action like this. So, and then
and it's gonna be volatile. It's gonna be kind of this volatile sideways market while it shakes itself out and puts in kind of that higher low. And then, guys, I really think it ends up being the similar type thing you see every year. You get this volatility that comes into May, and then you get into June, the summer months, we rally through, and then you get more volatility in the fall ahead of the election, and then it rallies after the election. That's, again, seems to me like that's how we're setting up, unless World War III really does break out in the Middle East in a bigger way, right? If that happens, then all bets are off. Then, it's a whole new paradigm out there.
Yeah.
So we'll see how this plays out. But as of now, this is very normal action.
Very normal action.
That's that's the context we need to understand.
Dave, there's a question in the chat here today, which it's actually something you were just talking about earlier. An annoying SPX call spread.
Yeah, 50 wide, it looks like. Frankly, I'm sick of managing it. The trade is just about even in terms of premium, about managing this to some kind of closing. I had a couple of these that I've been working since the beginning of the year that I just exited today. Like I took an L on them. These aren't newsletter trades for me. They're just other ones that I do. I took an L on them, but I mean, pretty small one for the size that they were, and so I was happy just to be done with that. It freed up a ton of cash. I'll put that back to work, over the next couple of weeks and make up, the little bit that I had to pay, to exit these things. But it's nice to kind of clear the decks and get out of these things so that, you can get back to doing what you do and doing it right. So, I mean, when you say the trade's about even in terms of premium, wondering what your thoughts are about managing it. Like, I don't know what your cost basis in the trade is. I don't know if you've got credit in it or if you've got debit in it. But let's say it's a 50 wide, right? So if it's a 50 wide and you can get out of it for $12, and free up $5,000 in cash and spend 1,200, you can make that 1,200 back over the next few weeks or so. It's kind of like, why stay in and just, get out of it, right? And don't, then you got like, do I put a put spread on? Well, if this thing keeps dropping, then that put spread could be in trouble. So it's kind of like, it was a big losing trade. Now it's a smaller losing trade, and you got to kind of figure out what makes sense for you to cut your losses. So for me, when I've got trades like that that have been underwater for a long time, and then all of a sudden I can exit that thing for a small amount of the width of that, I'll take it and get out every day of the week. So I prefer not to get into it in the first place. So I was telling Doc earlier, I've been playing almost daily on the NDX today, and I had a position at like 17,700. And as soon as this thing started to go south today, that thing spiked up, and I had to get out of it and lost a little bit of money on it. But I'd much rather get out of that. And then I've been selling 5 wides against the NDX all the way down today that more than paid for it, right? So there's a lot of ways to make money on things, but if you got a trade that's really going against you and isn't going to work out, you're better off just exiting, taking the L early and moving on than trying to stay in and manage that thing forever, because you're just going to spend a lot more time, energy, and aggravation managing it and even money managing it than you are if you just exit, move on, and make it up over the next few trades or whatever. So
yeah, there's the old Tony Robbins quote, which is "You focus on what you fear."
Yeah,
right.
exactly.
So when you've got a position like that, which is just eating you alive, and that's all that you can focus on. You wake up at 2:00 in the morning,
you're checking
going
futures.
Checking futures to see how it's affecting the trade. And meanwhile, everything else is going on around you. There's other ways to make money, and you're not paying any attention to that because you just want that problem to go away. So fear rules our lives in so many different ways. And one of the things that you find about being a trader is finding ways to eliminate that fear or displace that fear, or actually to some degree, when you sense fear, you start to marry that with opportunity. You're like, oh, my fear gauge is going up, so that must mean that I should be looking to go long or something else contrarian with that.
Well, that's like a perfect example today. This thing started to waterfall off, and this trade went from, almost being, it wasn't that far from what my exit target was for it, all of a sudden to being, unprofitable. And I'm like, done. Where's the opportunity? It's on the other side of that. Let's follow it. And so I was able to do that, right? And a lot of people get paralyzed by the fear, but the what's on the opposite side of it is the opportunity. So if you can learn to recognize that and keep the emotional response at bay and think logically, you can really do well, So, yep.
So you don't think there's much chance the SPY will close below 50.45 on the 18th?
It could, but who knows? Israel does its thing tonight, and it comes out just like kind of what Iran was over the weekend, and nobody does anything, and they both say it's concluded. Market rallies like crazy. Then you're right back in it, So I mean,
what was Iran doing? They had a bunch of drones that were like lawn chairs and balloons or something like that.
Yeah, I know. So if everybody knows the story on this, right? So Israel took out a annex to a consulate that had the general in it that planned the October 7th massacre. Okay. And Iran's behind all this. They just do it through their proxies. And so they took that guy out, and Iran said, we have to have a response, right? So for 2 days, they're like, we are going to respond. So, I mean, and then they shot like 350 unmanned drones and some ballistic missiles and other things from Iran all the way across Iraq and Jordan and everything at Israel. And like 99% of them were intercepted by the Air Force, and even Jordan shot some out, and the Iron Dome and all that stuff. And so, and then they came out with a statement that says, okay, things are concluded, right? So to me, it was kind of it's saving face, but if you're in Israel and 300 plus rockets and, drones are coming at you, I mean, that's not something to take lightly. And Israel now can't condone that because it's always been proxies. That's the first time ever that Iran directly has shot at Israel. So now we're in this problem where it can escalate because Israel has to save face. Israel can't sit there and say, oh yeah, shoot rockets at us from now on. We'll take it. So now they have to have a response, right? So now going like this. And that's what's got the market scared, because what does Iran do after Israel now retaliates, right? So where does it end, right? So we don't know. And that's the unknown. And the market hates the unknown, right? So that's our issue.
Did you see there was a Jordanian princess who is a
Yeah.
pilot? She shot down 5 of them.
Yeah, she's a pilot, and she shot down a bunch of these drones and stuff coming at them. Yeah, pretty crazy.
So just a quick one here. I want to show you guys something that you may want to look at. And I haul this out every once in a while. This is off stockcharts.com, and the ticker here is SPX A200R. So it's a percentage of stocks that are above their respective 200-day moving average, each one of them. And so typically what you'll see is some type of divergence. And actually, we really did not see much divergence at all with this as we went into the highs. And a lot of times you'll see this like that. And we didn't see any divergence back last August either. But what I want to show you guys is near the bottom, this is where stuff gets 25% of stocks were above their 200-day moving averages. This is where you get into some washout lows. This is where you can use tools like this to identify where the bottom. And I'll go to war on this one. It's like it's much easier to find a bottom than it is to find a top.
Yeah.
Tops are so difficult to spot. So right now everybody's going, well, no kidding. We knew that this was going to happen like months ago. Okay, well, months ago we were 300 points below where we are right now. So anybody that went bearish 3 months ago has been bent over backwards for the last 3 months through this.
Exactly.
So finding a top is always been much more difficult. So that's why International Pet Center.
That's a great signal to watch for. I mean, that's a great signal to sell, deep out of the money into, that sort of thing. You and I were talking about that as a signal for us in our account that we're trading together earlier. And yeah, there's a ton of, there's a ton of noise you're going to hear around all this stuff. Okay. But if you stick to and just watch price and understand price movement, understand, hey, here's 5%, here's 10%. We watch the energies. The energies are a good indicator, right? We're starting to release lower. So definitely enough energy to maybe go to between a 5 and 10%. One thing that I think is a good level to watch too for the SPX, if it wants to continue lower, 49.70 is that moving average on the standard Bollinger Bands set up with the weekly chart. So that's a nice little level to come down to. It undercuts 5,000, right? So you get that undercut that brings more fear, and then you kind of find support and go from there. So price is still king. Turn out the noise, and there's some good indicators like what you showed from a bottoming standpoint. But I'm content to sit back and let this thing go this week and not trade any new trades and just wait. So
I want to show you guys out there something that we are going to look at doing here fairly soon when it makes sense to do so. Like here's a chart of the SSO. This is a 2x leveraged ETF. It's something you don't want to hold for too long because it will have some compression in it and some drag, but it makes an excellent swing trade. So if I look at this and say, what are the levels that I'd want to sell against? Where would I want to be assigned? To me, what sticks out is the $65 level. So I want to sell a $65 put. So let's go over to the $65. Let's go over to the option chain here, and let's pick something out to maybe June. So we set a $65 put for June. Okay, so that brings in, I am going to, let's see. We're going to go into our analysis tab here. And we're going to sell that $65 put, analyze selling that. Okay. And we'd probably get somewhere like $1.55 for that. So let's go $1.55. That is what we're going to use to finance this trade. Now let's look on the call side, and what can we buy over here at the call side? Well, we can buy the $80 call. So we're going to analyze buying that. And we would probably pay no more than 90 cents for something like that. So we get a little bit of surplus, and this is what it turns into. So here's where the current price is at 72. We've got an area all the way down here to 65 that we can still make money at. And even if we get assigned at 65, I'm a willing buyer at 65. I'll go ahead and buy the SSO down at 65. However, if it reverses, if we see that reversal to the upside, then I've essentially got 100 shares of stock that I'm riding long. And that
there are right calls against it.
Yeah. And so the thing I love about this, and the thing that our members love, is that you've got this whole area in there where you can't lose money. You cannot lose money, right? It could do anything inside of there. However, if you get your meat hooks into a big swing, which we are going to see, I mean, we're going to go down like this. We're going to jump up there, sell into strength on here, and look for some kind of like a 10% return. And this is how to do swing trading without setting yourself up for a lot of risk. Now, you do need some capital. You got to be able to accept the assignment of $6,500 of that put option. But if you got $6,500 that you can swing trade with, this is a great way to do it and sleep at night. So this is, we call this a modified synthetic long, or some people call it a risk reversal trade. So we'll be looking to do some of those in the near future here, especially once we get down.
I think this resolves itself by June, and you're back to rallying. So I think that's a great timing to do that right now on this. On like something like the SSO, I think, we might be able to get, I mean, we're hitting the lows of the day right now, right? Looking over the screen. I figure we're going to sell off into close today even further. So you're going to get kind of that washout move, if you will, in the close today. So, for international pet sitter, hold tight, you might be able to get better exit through the end of the day here. You might see this thing down below 50-50, right? So that's what looks like we might be tracking for.
50-55 is minor support, and below there, it's going all the way down.
There's no volume left. It's like it's like no man's land.
So let me show you guys really quick what Dave is talking about here. This is what's called volume profile. So I've got volume profile on the spiders here. And so what this is volume at specific price. And what you have to understand is there is no support that comes from a run like this or from the NVIDIA gap. That was the NVIDIA gap that we had back in February. There's no support there. So this thing basically will just fall through an air pocket until it gets down to wherever it finds support, where there is volume at price. There's nothing to defend down here. So we could see this go down very quickly down through that. And it's unsettling if you're not aware of what volume profile is. And then you can see the same thing that's happening here is that we don't get to be substantial support until we get down to 480, which is 4,800. And there we go. So all these candles where we just get this runaway move, that's great while it's going up, but there's no support down there. No means of visible support.
And again, if you look at this move, coming down to that level, 4,800 is still a higher low standard 10% pullback in the market.
Yeah, especially if we look at the weekly chart here.
You are still in a bull uptrend.
Yeah. I mean, we could literally, so this goes all the way back to this pivot here, which is from the 2021 highs. So that is very common. That's called a swing test. And so that's right at 4,800. That's where we had, there's a good bit of trading activity there. This is why we have that area. But this is all fairly low volume up here. But all the heavy volume starts at 4,800. So, actually, it would not be a bad thing for us to come down to 4,800. But what you guys have to understand is it's not going to happen all at once. What happens is you dump, and then you rally up like crazy, and then everybody says, oh, coast is clear, and then boom, here comes round two, and then
Exactly.
coast is clear, then here comes round three. So markets always move in waves like that, especially in corrective action, because what you'll find is most of the candles during a corrective move like this are actually green, because the
Mm-hmm.
red candles occur so quickly and they're so big that they chew up huge chunks of real estate, and then it rallies like crazy. It takes weeks to rally back up again, and then it dumps in just a couple of days. So
And that's why you always hear the bull climbs the stairs, the bear goes out the window.
yeah,
Because when selling begets selling. So when the selling starts, then people have to cover, and then they start to see, oh, I'm getting attacked. I need to get out of my positions, and so on and so on and so on. It just exacerbates itself until everything's cleared out. Then you turn and go back the other way. And
yeah,
that's just the dynamics of how, it works. So selling, when you start to get these big, waterfall declines, they compound themselves because people have to cover, people start to get positions in trouble, they got to exit, and it just selling, 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 selling.
something else that Dave and I also talked about last week is like when you get a shift in market character to the downside, all of a sudden, remember what we said about fear. Fear rules the market. People say fear and greed. It's nothing to do with greed. Only happens when somebody that's got an extraordinary amount of money stays in positions for too long. That's not most people. Most people still are driven
Right.
by fear. Most people in the market are driven by fear. So when fear starts to make an appearance towards the market, all of a sudden, what happens is, and I'll use a term here, your reticular activating system. It's kind of it's always looking out there. It's why you can hear your name from across, a crowded room. You hear somebody say your name, like, hey, what, who was that? That's your reticular activating system. So when it's triggered by fear, all of a sudden you're going to look for everything that scares you. And then fear begets fear, just like what Dave was saying. So
Yeah.
this is why I think everything comes in like threes. There's always the initial thing that starts off, and then all of a sudden the media picks up on this because they're like, hey, everybody's scared out there. Let's give them more. And that's what they do, because their ratings go off the hook.
Yeah.
Once
It's ratings.
when corrective action hits, their ratings go off the hook for like CNBC and Bloomberg and stuff like that. All of a sudden they get a whole bunch of new viewers because people want to know what's happening, right?
Right.
And it doesn't really matter, right? What you find is that the less that you pay attention to that stuff, the more that you just focus on what the chart is doing and telling yourself in advance what to do. Like when it hits 5,000, this is what I will do. When it hits
Yeah, I
4,800,
guarantee
this
if you
is
turn
what.
on like CNBC or any of them right now, the chyrons are market sell off, market crash,
Oh, and they'll have
sensationalizing
this.
everything, where this is just really normal
They'll have
type
this.
stuff. In fact, if you look at the one that's taken on the chin, probably the most today is the NASDAQ, probably because rates are up. The Dow, looking at the Dow, is only down 230, and that's probably because Goldman Sachs is keeping it propped up today.
Yeah.
But it was already correcting ahead of the rest of these. So the Dow's actually been leading down ahead of the NDX and the SPX.
If you're watching a TV channel that's got a great big block or a great big red block of the Dow, like real time ticker, while all the other, run. Get off that channel, go somewhere else. I saw the whole thing happen during the pandemic. My wife was working from home at the time, and she was, she had the TV on across, and, we're down 700 points on the Dow. And she's like, oh, look at that.
Yeah.
And, that's what happens to everybody. They look at that and they go, oh, that fear. And so they do the same thing as everybody else. We're all like lemmings that run right off the edge of the cliff instead of looking at that and saying, how could I take advantage of that? We have nothing to
nothing to fear but fear itself.
Right, exactly.
And there's a lot of truth in that quote.
Yeah.
But Doc's right. Fear is what rules it. So when you feel yourself with that fear, when you've got a trade that's going against you, and it's just when you know, like and you just, your hair stands up on your neck. You have that feeling, because we all get it, right? That's when you don't be paralyzed. If you're in a trade that you're like, oh, I think I can maybe stay in, or I think I can salvage it, if it's going against you that way and you're getting that feeling, it's like this one today. If I'd stayed in it right now, I'd be taking a full loss. I'd be losing like 15 grand on it, you know? Instead, I took a $3,000 hit and I made it back in the last few hours. Done, right? But if I had stayed in thinking I could stay in and pound my chest and there's no way, even though I lost my edge, I can do it. It's going to work, right? That's when you get into trouble, and that's when fear. So you take the opposite side, look and see, okay, where's the opportunity right now? It's over here, right? This thing's going to waterfall. There it goes, right? So yeah, it took me 2 hours to make that money back.
Yeah, that's why we always say, like, rule number one of risk management is never enter a position unless you know exactly what your exits are. And so that it takes all the drama away from it. It's like, oh well, there's my exit. Goodbye.
Yep.
Because eventually you know that you're going to make it back. So it's not a big deal. So we have had a character shift in the market. We have to trade differently now. So that's what we're going to be focused on for the next 2 to 3 months, and then what you're going to see us do is in a couple of months or so, you're going to see us shift. You're going to see us go, hey, I think we can start to get long here. And we did that last, a year ago. We were doing that a year ago. Like, hey, I think we're out of the bear. Let's shift long. What's the worst that could happen here? Set yourself up where you know exactly what your risk is, and then go ahead and take it. Stay away from the TV with a red box on it. Stay away from that. So, hey, everybody, I think we're at the end of our allotted time here. So we're going to.
My best advice for this week is just hang tight. It's going to be a very wild swinging week because it's going to, obviously this Israel-Iran thing is going to, have to shake out either way. You've got a ton of energy left in these charts that looks to be releasing lower. So just chill. Right? If you got positions you got to manage them. Like I've got positions that I may have to manage in my newsletter. I got to do that. But no, I'm not doing any new trades till at least Friday at this point after watching today and how we're doing. It's not worth it. And just, it's a great week to learn. Watch how this market moves. Watch the swings. Watch the price action. Watch how it relates to key levels. Like now we're below 5,100 on the SPX. Do we bounce back tomorrow? Hit 5,100 and then sell off, right? We retest 5,100 and then sell off. Watch the dynamics. It's a great learning week for this stuff. So, yeah. So, and then, if you have questions, send them to us, support at 12minutetrading.com. And if you're students, obviously, send us your questions. What do you need? Go in our community, right? That's what it's there for and stuff. And, just enjoy this move and learning from it, and then get ready to start really profiting from it. So, yeah.
Okay. All right. Guys. Well, thanks, everybody. Thanks for your questions, and thank you for joining us, whether or not you were live or on the replay. So we'll see you guys again next Monday, I suppose. Thanks, everybody. You guys take care. Guys. Bye now. Okay, real quick.